Okay, good evening, everyone. Today is Tuesday, October 6th. Okay, so I'm going to finish this last question that we didn't finish last Thursday. Okay, so I just want to make sure that we have enough time this Thursday for chapter 5. So therefore, I'm just gonna create this video for your benefit to see how I do this problem, okay? So I'm going to go through each question one by one and give you a full picture of how to deal with issues like this, okay? It is very, very, very important that you understand how to do this calculation, okay? So I cannot emphasize how important it is that you need to do this problem. Make sure you understand it, okay? Okay, so we should start from the very beginning, okay? So Condo King is building a luxury condo for a contract price of 60 million. This is estimated to be a 3-year project with an estimated cost of 48 million. CK uses the percentage of completion method of revenue recognition using the cost-to-cost method of estimating the percentage complete. The following is the best available information at the end of each year. Okay, so here is the table that presenting all the relevant information. Okay, so for each year, okay, we are provided with the year-end information, such as the actual cost for that year and the estimated cost to complete at the end of that year, and billings on construction, how much bills the company has sent to the customer, the billings, and also how much cash has been collected by the end of the year. Okay, so this is a 3-year program. Okay, 3-year program. Okay, the first question is compute the amount of gross profit to be recognized in year 1, year 2, and year 3. Okay, so let's take a look. Okay, so in year one, this is the first year of the contract. So actual cost is 13,000. So at the end of year 1, they expected that the additional cost to complete the project is 37,000. Therefore, at the end of the year 1, the projected total cost is 50,000. Okay. So the contract price is 60,000. The difference is my estimated gross profit, 10,000 here. Okay, 10,000. So we are using cost-to-cost approach to estimate the percentage of complete. So we are using the cost incurred to date. Okay, so that's 13,000. Okay, divided by the total expected cost, 50,000. So that's 26%. 13 divided by 50, that's 26%. So the gross profit to date, okay? So the estimated gross profit is 10,000 and the percentage is 26%. So 26% of 10,000, that's 2,600 here, 2,600. And this is the first year. There's no profit recognized previously. Therefore, the current year for year 1, the gross profit is 2,600. Okay? So that's for year 1. And for year 2, okay? You can take a look at this table. For year 2, the actual cost incurred for year 2 is 27,000. So that's the actual cost incurred during year 2. So the cost incurred to date, okay? So what's the total amount of cost incurred by the end of year 2? Well, you have to include the first year's cost. So 13,000 plus 27,000, which is 40,000, okay? So the cost incurred, okay, the actual cost incurred to the end of year 2, okay, by accumulation is 40,000. The estimated cost to complete is 18,000. So at the end of year 2, the total projected cost is this together, okay, 58,000. Okay, so still the same contract price. The profit margin is much lower, it's only 2,000. Again, using cost to cost approach to estimate percentage of completion, we are using actual cost incurred to date, 40,000, divided by total cost, 58,000. So 40 divided by 58, you get 68.97%. Okay. The gross profit to date, okay, so the estimated total gross profit is 2,000. And the percentage of completion is 68.97%. So these two together, you get 1380, okay? So that's the amount of total gross profit you should recognize by the end of year 2. However, for the first year, you have already recognized 2,600, okay? That's already more than what you should have recognized up to the end of year 2. So now year 2, you have to recognize a loss, okay? So basically, in the year 1, you recognized 2,600. In year 2, if you recognize the 1220, so together by the end of year 2, you are recognizing 1380. Okay, that's the number, the target number you want. Okay. Okay, now moving to the last year, the actual cost incurred by the end of year 3 is 54,000. The project is done. No need for additional cost, 0. So total cost is 54,000. Okay. So now you can see the real gross profit is the difference of 60 and 54, which is 6,000. Okay. So you should really recognize 6,000 gross profit from this project in total. And previously you recognized 1380, right? You recognized 1380 previously. So the difference is 4620. This is a number you should recognize for year 3, okay? So now take a look at the 3 numbers, okay? 26 profit minus this loss, 1220 plus 4620. You should get 6,000. That's your actual gross profit. And this is how they are recognized over the 3 years, okay? So this is the first question. Make sure you understand this calculation, okay? Make sure you understand this calculation. So the second question is about the accounting journal entries for year 2, right? Remember in last lecture, we talked about the accounting cycles for the construction contract, right? And there are 5 distinct stage, right? Freeze. So we are going to use that to make the accounting entry, okay? So the first one is about the cost, okay? So you recognize construction in progress, you credit cash or accounts payable, and this would be the actual cost for the year. And we are talking about year 2, right? And we know this number is given, 27,000, okay? So this should be a very easy entry. Next, we are doing billings, right? Billings, you debit AR, credit billings on CIP. So the billings on CIP is 25,000. Okay, so your debit AR 25,000, credit billings on CIP 25,000. The next is the cash collection. Okay, so you received $20,000 cash. Okay, so you debit cash for 20,000, you credit accounts receivable for 20,000. So these three entries should be pretty straightforward. So you need to know this. Okay, don't lose any marks on this in your quiz or in your midterm exam or in the final exam. Okay, make sure you know this. And the next one is revenue recognition. Okay, so you're gonna recognize cost of goods sold. Cost of goods sold equal cost of sales. That's equals to actual cost 27,000. Okay, and you're gonna recognize the revenue, which is the cumulative percentage of completion minus the previous percentage completion. That's your current percentage completion, and then you multiply by 60,000. What you get is 25,780. Okay, and then you realize you need additional credit. Okay, for 1220. What is 1220? If you remember, 1220 is here. Okay, is the current gross profit, current loss in the year 2. Okay, so if it's a loss, you're gonna credit construction in progress. Okay, so that is for year 2. Okay, year 3. I hope I didn't miss any entries. Okay, so for year 3, so we have this information here. Again, the first 3 entries should be quite straightforward. So 14,000 actual cost, billings 20,000, cash collections 32,000. Okay, so for sure, don't get this wrong. Okay, in your quiz or in your exams, don't get this wrong. Okay, so next would be revenue recognition. Okay, so you debit cost of goods sold equals actual cost 14,000. Okay, so then you credit your revenue. So year 3 is the last year. So by this time, the percentage of completion is 100%. Okay, and previously the percentage of completion is 40/58. Okay, so the difference is the percentage completion during year 3. Okay, and you times 60,000. The number is 18,620. Okay, so now you can see the difference of these 2 revenue and cost of goods sold is 4620, where you're gonna debit the construction in progress 4620. And why we have this number? Because in year 3, we have already figured out the gross profit is 4620. Okay, so don't forget phase 5, the completion of contract. So don't forget this entry. At the very end of the project, you have to close the construction in progress and the billings on construction in progress. Okay, you have to close both accounts. So the contract price is 60,000. Okay, so you're gonna close both accounts by this amount, 60,000. Okay, so here is the 3rd question. Okay. Okay, the 4th question is asking, what if in 2 years, okay, the number is not 18 million, it's 22 million. Okay, in the previous example, this number was 18,000. So the question was asking, what happened if this number is 22,000? Okay, so let's take a look at what happened. So when I add all the cost, right? The first year's cost, 13,000, plus second year's cost, 27, and plus expected third year cost, 22,000. So in total, I get 62 million. So that's more than 60 million, the contract price. Right away, at this point, we realize this is the onerous contract. This is onerous contract. Well, based on the efforts, we have to recognize all the loss right away. Okay, we have to recognize all the loss. So how much do we lose on this project? So the cost, 62 minus the price, that will be $2 million. So we are expecting at the end of the day, we are going to lose $2 million on this project. Okay, so up to this point, the total amount of loss should be 2 million, right? Okay. So the percentage of completion is, okay, in the first year plus second year, so that's 13 plus 27, that's the total actual cost to date, okay? And then divided by total, which is 62, okay? So 40 divided by 62, that's the percentage of completion, which is 64.52%, okay? That's the percentage of completion. Okay, so the total loss recognized to date should be this percentage of completion times the expected loss, 2 million. Okay, so the total loss recognized to date should be 1.29 million. The expected future loss in year 3 would be 35.48%, okay, times 2 million equals 0.7 million. So between these two together is 100%, right? So this is the losses has been recognized. This is the losses to be recognized in future, to be expected in the year 3. So together they should equal to the total loss. So the loss recognized to date is 1.29 million. And in order to make 2 million in total, the expected future loss has to be 0.71. So together, these two together gives you the $2 million loss, okay? The revenue recognized in year 1, if you remember, we recognized $2.6 million loss in year 1. And this has to be reversed. So you recognize that as a profit of 2.6 million in year 1. There's no profit in this contract. So you just have to reverse it. So 2.6 million loss, okay? So in total, you have to recognize a $0.6 million loss, okay? So 2.6 million is the result of the reverse of the revenue previously recognized in year 1. Okay, so that's the 2.6 million loss. And then another 2 million loss is the total expected project loss of this onerous contract. Okay. Okay, so what's my journal entry? What is my journal entry then? Okay. So I'm going to talk about the revenue recognition here, the journal entry. So you debit the cost of sales, that equals the actual cost of year 2. And in year 2, the actual cost is 27,000. Okay. And then you want to recognize your revenue. What is my revenue? Okay. In year 2, the percentage of completion is here to the left of the screen in the middle, 64.5%. That's the percentage of completion at the end of year 2. And the percentage of completion for year 1 is 26%. So if I take the difference, 64.52% minus the percentage completion at the end of the first year, so this gives me the percentage completion for year 2, and then times 60,000. I should get 23,110. Okay, that's my revenue. Okay, so now, what about my the previous revenue? Remember, in year 1, we recognized a $2.6 million gross profit. That has to be reversed, right? Because there's no gross profit on this project. So I'm gonna reverse the entry by credit construction in progress for 2.6 million, right? 2,600 here. And the difference, additional credit here, that's the provision, okay? That's the liability, right? Because you are losing on this contract, owner's contract, you know, the loss become your liability. Even despite the loss, you have to finish this contract. So created provision for 1.29 million. Okay, 1.29 million. Okay, so what else? Now, did I miss something? Yes, the expected loss, right? If you remember the entry, there's also an entry for the expected loss. So you debit expected loss for 0.7 million, okay, for 0.7 million, and you credit the liability, okay, provisions for liability, 710. Okay, so that'll be my journal entry for year 2 if the number we're dealing with is 22 million instead of 18 here. Okay. All right, so that's my a complete going through on this question. Okay, so I hope it makes sense. If it doesn't, feel free to ask me a question on this. Okay, so I'm hoping that it makes sense. Make sure you know how to do this. Okay, how many times do I have to repeat myself so that you can be convinced these stuffs are important? Okay, you tell me a number, I'm gonna repeat that many times. Okay, it is very, very important. Okay, very, very important. So make sure you're gonna learn. You know how to do this. Okay. All right. Have a good night, and I'm looking forward to seeing you on Thursday.